when the Dow tumbled nearly 400 points, or 1%, on April 2, shares of TKO Group Holdings, which houses the Ultimate Fighting Championship and World Wrestling Entertainment, went up 5% before trading was halted on news that Endeavor, which owns 51% of TKO, was going to be taken private by Silver Lake Partners at a big premium. But you don't have to be a behemoth like Silver Lake to invest in sports assets. Christopher Marangi, a portfolio manager at Gabelli Funds, believes the stocks listed below are buys based on the difference between their stock prices and private market values. Full disclosure. Funds managed by Gabelli own about 10% of Braves Holdings, 5% of MSG Sports and less than 5% of each Manchester United, TKO Group Holdings and Formula One Group across all classes of stock. Mangini also personally owns less than 1% of each of the 5 securities. Before buying, keep in mind that it usually takes a catalyst, such as an acquisition, for companies to achieve their PMVs. Prior to the announced Silver Lake buyout of Endeavor, for instance, shares of TKO were down 13% since it went public in September 2023. The S&P 500 index, by comparison, had increased 18%. Among the other 4 listings in the table, only the Formula One Group has outpaced the market since going public, and just barely. So patience is required. Another factor that deters investors. By traditional yardsticks, these sports stocks can seem expensive. TKO, for example, was trading at 39 times forward earnings versus a comparable multiple of 21 for the S&P 500. Madison Square Garden Sports, which owns the New York Rangers and New York Knicks, goes for 70 times its next 12 months projected earnings. Formula One trades has a multiple of 52. The English soccer team Manchester United and Atlanta Braves Holdings don't even have forward PE ratios because they are losing money. Chris Marangi of GAMCO believes these sports stocks are buys based on their private market values. Scroll right to see the full table. None of this deters Marangi, an astute appraiser of asset values who has been managing portfolios for famed money manager Mario Gabelli for 21 years. A big reason he values owning sports stocks is the astronomical prices teams have been selling for in recent years, thanks in part to the introduction of private equity money. One recent example: Peter Angelos, who purchased the Baltimore Orioles for $173 million in 1993, sold the baseball team last month for $1.72 billion to a group led by billionaire David Rubenstein. Sports teams have historically been excellent stores in value and they are limited in number, says Marangi, and live entertainment and sports has had strong secular tailwinds that have only strengthened since COVID. There is also the ego factor. Private market trophy value is far bigger than public market trophy value, he notes. Atlanta Braves Holdings, for example, has a private market value per share of $58, a 38%